Hello and welcome to Small Gold. In case you missed it, top gold and silver stories for the week ended February 4th, 2017. Congressman tells Yellen cease and desist. We're going to talk about that. Congressman Patrick McHenry, who is the vice chairman on the Committee of Financial Services, he sent a letter to Janet Yellen saying stop Federal Reserve participation in international forums on financial regulation. The letter states that Fed participation in international forums on financial regulation must cease. It called on the secretive prior agreements with the Federal Reserve, with the Financial Stability Board, with the Basel Committee on Banking and Supervision, and the International Association of Insurance Supervisors. All those agreements, he says, need to be re-evaluated. Also in the news this week, Trump widens his battle with the media, courts, and certain corporations, and silver rose for the fifth week in a row in 2017. Let's talk about this letter from Congressman Patrick McHenry sent January 31st, 2017. He sent it directly to Fed Chair Janet Yellen, calling for a withdrawal from all future discussions and negotiations with international financial regulatory bodies. The vice chairman of the Committee on Financial Services also called for a review of prior agreements with such organizations. And Mr. McHenry invoked Trump's America First principles as the rationale for his call to cease participation in international financial regulatory negotiations. Now, let's take a quick look at the letter. See, there it is. I'm not making it up. There's a link to the letter. There's the letter from Patrick McHenry. He is the Vice Chairman, Committee on Financial Services. There's the Honorable Janet Yellen, and he is saying, despite the clear message delivered by President Donald Trump in prioritizing America's interest in international negotiations, it appears the Federal Reserve continues negotiating international regulatory standards for financial institutions among global bureaucrats in foreign lands without transparency, accountability, or the authority to do so. This is unacceptable. His point, he goes on further, that this participation in these forums may not be achieving the objectives set by the new administration and will likely require a comprehensive review of these past agreements that unfairly penalize the American financial system in areas such as bank capital, insurance, derivatives, systemic risk, and asset management. He calls the agreements in the past secretive structures in international forums, and these agreements were negotiated and agreed to by the Federal Reserve at little notice to the American public and were the result of an opaque decision-making process. And they were then turned into domestic regulations that forced American firms of various sizes to substantially raise their capital requirements, leading to slower economic growth here in America. So when the Basel Committee on Banking and Supervision sets capital requirements for banks, the United States banks then have to raise those capital requirements, means they can't lend this much money, slows growth. This is the congressman's argument. And then he says it is incumbent upon all regulators to support the U.S. economy and scrutinize international agreements that are killing American jobs. Accordingly, the Federal Reserve must cease all attempts to negotiate binding standards burdening American businesses until President Trump has had the opportunity to nominate and appoint officials that prioritize Americans' best interest. So, as we know, Donald Trump has criticized heavily, roundly, the trade deals the United States has struck as not being in line with America's interests. But Patrick McHenry brings into question a whole new set of agreements, and those of the Federal Reserve with these international financial regulatory bodies. So Trump, I'm sure, is probably a willing ally in this battle with the Federal Reserve. Now, note that Patrick McHenry did not question the monetary policy of the Federal Reserve, although Trump has done so. That is supposedly an independent body that conducts monetary policy without interference from political bodies, but we know from history and from just observing them, they do tend, or at least there's evidence circumstantial evidence, they do take politics into consideration. And we do know that Arthur Burns in his secret diaries talked about how Nixon would pressure him to keep monetary policy loose so that he can get reelected. And eventually, Arthur Burns admitted that he did cave to such pressure. Anyway, that is an aside. So Trump to date has focused on trade deals that he believes are not in the best interest of the United States, but he's not to date mentioned these international banking agreements. I expect us to hear more about this. Also, I had done a blog post and YouTube called Trump versus Yellen, a showdown is brewing. Well, let's just add to the fire this particular concept of the Fed joining into these international financial agreements that bind United States banks to international standards rather than standards set by American banking standards. So if you want to check that out, please check that out. Now, top stories of the week. Sorry, it's back on Donald Trump again. Now, remember, anytime I talk about Donald Trump, I'm doing analysis, not advocacy. So when I say Trump will do this or Trump will do that, I'm not saying I want Trump to do this or that. And I'm also, when I say someone will oppose him, I'm not necessarily saying I want people to oppose him. I'm trying to be objective and to give information as I see it and project what might happen. Okay, with that in mind, what we saw this week was Trump continues his battles with the mainstream media, the courts, who overturned his immigration ban, and recalcitrant corporations that opposed his ban like Starbucks, Amazon, Google, Lyft, Facebook. And there's a story here you can click on. The immigration ban drew a swift response from Silicon Valley companies. Here are some of the headlines. These are from companies on the immigration ban. Amazon working with lawmakers to counter Trump's immigration order. Starbucks plans to hire 10,000 refugees. Lyft pledges $1 million to ACLU, which is money used for a legal organization to combat the ban. Google co-founder Sergey Brin joins protesters at San Francisco International Airport. Goldman Sachs CEO leads Wall Street in slamming Trump travel ban. COO Sheryl Sandberg of Facebook says the ban defies the heart and value that defines our best of our nation. Before Trump took office back in November, December, I had predicted that Trump's response would be to either passively or aggressively attack his political enemies. And his political enemies consist mostly of those who earn their livelihood in Silicon Valley, the media, government employment, and financial services. His votes and his support come from what you call the heartland of America, the flyover country, not on the coast, who benefit greatly from financialization, who benefit greatly from higher stock prices. Not that other people don't benefit from higher stock prices, because they have 401ks, I understand all that, but the bulk of the money and the wealth went to people who either work connection with venture capital, Silicon Valley, Wall Street, or who had bulletproof government jobs with great pensions. Those are the people that appear to be most against Donald Trump and people in the media, and those are the people who benefited the most. Now, my prediction was, and still is, that these enemies of Trump will receive some battle from Donald Trump. For example, Donald Trump has already ordered a broad hiring freeze on government workers. He probably will start cutting government workers from certain federal agencies, because if you're going to have fewer regulations, well, then you need fewer people to write the regulations, to implement the regulations. So I see that coming. And those government workers, for the most part, of course not all of them, but they are probably mostly opposed to Donald Trump. Same with Silicon Valley. We have companies that Silicon Valley produces in conjunction with Wall Street. They promote these companies. Many of them, like Twitter, don't, and Twitter's not even on my list of headlines here, but Twitter is definitely a Trump opponent. They were talking about deleting his account. These are companies that get multi-billion-dollar valuations. Their officers and directors make multi-millions, and in some cases billions, off of producing companies that make no profit. Now, when that happens, they then take all their money and they use it against Trump. So I think if there is some type of stock market collapse, I don't see Donald Trump being that concerned about. Now, of course, he's saying now, well, the stock market is high. It's because of me. Everybody loves me, and the stock market goes higher. As soon as the stock market crashes, he's going to be back to talking about this is a bubble, and bubbles deserve to be popped. And I believe he's going to be more focused on saying his job is not to reboost, to reflate, or use government resources to reflate the stock market, but rather to build the economy and focus on industrialization versus financialization, meaning that he's going to be focused on his private partnerships to build infrastructure, perhaps raising some money through the Congress to do infrastructure, giving tax credits to companies who will open up industry in the United States. So I believe that's where he will focus. And those jobs will go to people, not in New York City, most likely, not in Silicon Valley, most likely, but in the areas of the country where his support is. And I believe that is his campaign strategy for 2020. Now, I have done a few podcasts on this covering these points. I did one on X22 Spotlight. Actually, it's just right over here. What will Donald Trump do if the stock market crashes? I believe he will do nothing. I don't believe he's going to be in the mad rush. I mean, President Obama made the stock market one of the centerpieces of his legacy, that the stock market was at a low when he joined and it ended at nearly 20,000, the Dow Jones, when he left. I think Donald Trump, if the stock market collapses, will not be as concerned about the value of the Dow, but more about whether his jobs program is working. So I have done a couple of podcasts, Trump's industrialization versus financialization. I left them up here. So if you go to the website, you can see this blog post. I'll put a link below, and you can see all of the blog posts that I've done on this topic. Why the stock market may finally correct and QE4 won't happen. A lot of people think, oh, we're going to get QE4 if anything happens. I say no. I mean, I know that's not within Donald Trump's purview. That's up to the Federal Reserve. But it's interesting that Janet Yellen, who had been calling for buying more assets in the next recession, just recently, her most recent pronouncement said we don't even need fiscal stimulus, that the economy is doing fine. So they may be less concerned about the stock market, especially if it's going to help in their Donald Trump may do. Here's another one. Will Donald Trump crash the dollar? Okay, enough on Donald Trump. Let's move into the rest of the news. Top economic story of the week, in my mind, is silver rose for the fifth week in a row, and gold also rose. Gold closed last week at 11.91, but was up 2.4% to 12.19 this week. Silver also gained 2.2% up to 17.49. Gold silver ratio still hovering around 70, closed at 69.73. Just a reminder, if you enjoy the work we're doing here at Small Gold, please donate via PayPal or via Bitcoin. Thank you very much for those who are donating to Small Gold. It is the way that Small Gold keeps in business, so thank you very much for doing so. Also, you can buy your gold and silver through Small Gold, not investment advice that you do or do not buy gold or silver. However, if you are so inclined to buy gold or silver and you think it's the right thing for you, please consider buying it through Small Gold, because you will make Small Gold wealthy. Now, you'll help Small Gold to get a small commission on each sale that I make through the site, through the links, through the banners, and through the links below this YouTube video. You pay no more, no less than if you visited the sites directly. We've got SD Bullion, if those of you like SD Bullion, BGASC, which is featured right there, JM Bullion, Money Metals Exchange, and Golden Eagle Coin. So if you buy from those companies, you can buy directly through, not directly through Small Gold. You click on the links and you go back to those websites. There's just an affiliate link that credits the sale as coming from Small Gold. So thank you for those of you who do that as well. Stories of the week. India now talking about they need to have a comprehensive gold policy. There's a mess. They need to have a comprehensive policy in general. They had that cash ban. They've got the gold monetization scheme that doesn't seem to be working very well. They've got the confusion of whether they're going to ban gold, whether they're going to restrict gold. They have a gold tariff. India has, according to the Indian Reserve Bank governor, needs to have a comprehensive gold policy. There's another paper gold product out from the World Gold Council, a new way for gold bugs to cash in on a strong dollar. It's a new type of ETF that gives you protection against the dollar, and you can benefit from the price of gold going higher. Anything to keep people away from buying physical gold. U.S. Mint sales updates. I won't go through the daily ones here because I did do a final month-end YouTube on American Silver Eagles and American Gold Eagles. They're out now, and they're actually linked below, so you can see the video and the charts that are in those podcasts. And there's all your advertisements for gold and silver. Economic data. Again, mixed bag as it has been for years. Personal spending was up, but personal income was lower. So why is that good? Well, people think people are spending money. That's good. But if they're spending more money, then their incomes are rising. Then they're going further into debt. So that's probably not that good. Royal Mint CEO, more people are turning cash into gold to escape political risk. Here's an interesting story. You can click on that one. Donald Trump's fixation with gold. It's not a financial story. It's more of a pseudo kind of psychoanalysis of Donald Trump and his love affair with gold. British Royal Mint announces partnership with World Platinum Council to launch platinum bullion coins. Now, the United States Mint does make platinum coins, so does the Canadian Mint. I will be talking about those in a podcast later this week, so please subscribe to Small Gold, subscribe to this YouTube channel because I will be talking about platinum later on in the week. Home prices continue to rise, but the Chicago PMI fell. Again, mixed data. Home prices rising to me is not evidence of an economic recovery. Home sales are. Home sales are not rising that fast, but the prices of the ones that are sold is rising very quickly. De-dollarization. Iran accelerates its de-dollarization in response to Trump's immigration ban. All right, that's not to be unexpected. More on daily gold and silver sales at the U.S. Mint. Now, here are the links and the podcasts on the American Gold Silver Eagle sales in January. And then also, we did one on the Gold Eagles as well. Here's Kazakhstan. Finally got the final numbers for 2016. Kazakhstan added 36 tons of gold to its reserves in 2016. This makes Kazakhstan the third largest adder of gold to her reserves of any of the international or any of the central banks in the world. There was a story out in World Gold Council about how central banks were net adders of gold to reserves in 2016, but really it's only from three banks. That's Central Bank of Russia, People's Bank of China, and Kazakhstan. And Russia bought slightly less, China bought even less in 2016 and 15, and Kazakhstan did a bit more. The other banks just didn't sell any. They had been selling in the early 2000s, but central bank buying is not a big deal except in Russia and a bit in Kazakhstan, and China didn't buy any in December. So we'll see what the People's Bank of China does. We'll have that out again next week. So we will have the January figures for the People's Bank of China. I suspect they didn't buy any again in January. They've been shedding reserves to protect the yuan. They may not be buying gold as much in 2017. Now, a lot of you say, oh, but China, they're always buying gold. We're not talking about China, the country in general, and the people there, and the corporations there, and the other banks. I'm talking about the People's Bank of China may not add gold. Doesn't mean they're lying. It means that is what they're doing to protect their... People's Bank of China is the international facing bank, the central bank of China. They don't have as much, they don't have to have that much gold, because remember, gold is not liquid. If they want to have assets for the country, they don't have to hold it at the People's Bank of China. They can hold it elsewhere. Gold trading in Hong Kong. Here's an example. Yeah, sees positive debut for year of rooster. Hong Kong imports into China are immense. Gold mining in China is immense. Gold imports through Shanghai is probably, we don't know, or it's probably pretty high. Gold purchases among Chinese citizens is probably high. It just doesn't end up at the People's Bank of China. Trump policies, comments, and investors rushing into gold. Just an interesting story. You can check that out. I mean, you would think if gold does well in times of uncertainty, nothing is more uncertain than the next thing that might come out of Donald Trump's Twitter account or his mouth. Jobs were big from the ADP payroll and also from the Bureau of Labor Statistics later in the week. Mortgage applications, however, were down. Purchases were down. Refis were also down. Perhaps rising interest rates are taking a bite out of home sales. Another interesting case, JP Morgan had recently won dismissal of a silver manipulation case against it back in June, which we covered, and it was appealed to the Court of Appeals, and the Court of Appeals said, no, you should not have dismissed that case. I'm not going to go into the rationale there, but there's an entire 20-minute video explaining what happened in that case. So that case is back on. You can click on the link, or you can click on the YouTube and find out what the chances are of that case finding JP Morgan eventually liable. There's your non-farm payroll. It was up, but our average hourly earnings were very tepid. And that that payroll did not really move the markets very much. Normally in the past, if you get a big payroll beat, the market sells off, gold sells off, everybody starts thinking the Fed is going to raise rates. But I guess because the Fed has been so reluctant to do rates, they do 1/4 point a year for the last 2 years, and they didn't raise rates in January, and maybe they think, so what? You'd have to have like a payroll number that's such a blowout that would indicate the economy was overheating before the Fed would do anything, or a rate or non-farm payroll so low that they would think the Fed might cut interest rates. Fed chatter. I don't know why people listen to this anymore. Fed Evans expects inflation to rise to 2% by 2019. Downside risk remain. Sees fiscal boost to U.S. growth. Wants slow rate hikes. Nothing new there. And I think that's about it. No, there's the American Gold Eagle sales. And Perthman had a very good month in January. The gold was even better. Gold sales from the Perthman podcast will be out tomorrow. Be on the lookout for that. So subscribe to this YouTube channel and subscribe to smallgold.com. Enter your email address and you'll get updates, important updates when and as they come out. Thank you very much.